Hey everyone, happy Tuesday. Guess what we're going to do today? We are going to complete a federal form W 4. If you are married, filing joint with your spouse, we're going to go through the steps of how to properly get that form completed and submitted to your employer so that you don't owe any additional taxes at the end of the tax year. So, if you have additional questions after watching the tutorial, feel free to go to our website at tsjfinancial.com or visit my YouTube channel at It's Just Me, Dr. T. Now, let's get into it. This is your host, Dr. Tanya, and we're going to be talking about and doing a tutorial today on how to complete Form W-4 for your employee's withholding certificate. Any individual who's working for an employer should complete a W-4 form at the beginning of your employment. Today, we're going to specifically talk about individuals whose tax filing status is merit filing joint. So we're going to begin and I'm going to walk you through how to complete the form for both the taxpayer and the spouse. And we are going to go through what it means to be exempt and not to be exempt. We'll go over that a little bit more in specificity a little bit later on in another tutorial. So let's start. So the first thing you're going to do if you are the taxpayer and you are going to complete step one. For this example, I'm using fictitious, so I'm going to say, let's say wizard. So we're going to do wizard, and we're going to indicate that the wizard is the taxpayer, okay? And we're going to complete the last name. That would be Oz. You would enter your social security number. And we are obviously using fictitious information. For the address, we're going to put 123 Yellow Brick Road. How about that? And the city or town, we're going to say over the rainbow. We're going to say that's in Kansas. Uh-oh. And the zip code. So if you are married and you file your taxes merit filing joint, you would select merit filing joint in item C of step one. So that's merit filing joint or qualifying surviving spouse. For the purpose of this tutorial, it's going to be merit filing joint. Then we go to the next step. So for step two, you will only complete steps 2 and 4 if they apply to you. In this scenario, we're going to use a couple that files their taxes merit filing joint, where the taxpayer annual salary is $100,000. And we're going to, for the sake of this tutorial, say that the spouse's salary is $30,000 a year. So we're going to, since this is a taxpayer and the taxpayer annual salary is $100,000 a year, we're going to look at step two and we're going to see what that means. So step A will not apply. Step B is indicating that you would use the worksheet if there are multiple jobs or spouse or multiple spouses that work in the house. So we are going to be looking at either B or C. So if there are only 2 total jobs, um, you can check this box. However, if the pay of the lower job is more than half of the pay at the higher job, and in this case, the higher job is $100,000, the lower job is $30,000. It would need to be half of that 100. We know that $30,000 is not half of 100, so we would not check this box. Okay, so we would not check this box. Instead, we would use step B. So we're going to go to page 3 of the worksheet and we're going to complete page 3, and then we're going to enter those results in step 4C, which is down here. So now let's go to page 3 and complete the worksheet. So for the sake of this worksheet, we're talking about the taxpayer. We're going to look at number 1. There are 2 jobs. The spouse works and the taxpayer works. The taxpayer makes $100,000 a year. The spouse makes $30,000 a year. So we would need to go to the tax table and we would need to see where the tax liability would would be based on these 2 annual salaries. Okay, we're going to use a grid method. We're going to first look at the filing status, married, filing jointly here. The higher paying job annual wage is $100,000, which is here. The spouse's salary, annual salary, is $30,000, which is here. So we're using row for the higher wage and we're using column for the lower wage. And they meet right here at $7,390. So that tells us that the estimated tax liability for this couple when they file their taxes is going to be $7,390. We're going to take this number, 7,390, and we're going to enter it on step 4C of this worksheet, which is right here. Sorry, right here. Step 1. We're going to enter in 1. So $7,390. That's the estimated tax liability based on these 2 pieces of information. Taxpayer salary, annual salary $100,000. The spouse's annual salary is $30,000. Okay. We will skip number 2. We would go to number 3. And in line number 3 is where we would indicate the frequency of pay periods. So if it's weekly, it will be 52 because there are 52 weeks in a year. If it's every other week, it will be 26 pay periods. If it's monthly, it would be 12 pay periods, so on and so forth. For the sake of this example, we're going to use 26 because that's the most common. So 26 pay periods. And then we're going to go to number 4, and we're going to divide the estimated tax liability, the estimated annual tax liability based on the salaries. And we're going to divide that by the number of pay periods in the year, which is 26. And we're going to get $284.23. Okay? That $284.33 should now be entered on the W-4 form in box 4C. So that would be here. Extra withholdings. So you would enter any additional tax you want to be withheld each pay period. This is where the 284.23 would be indicated. Okay? For the sake of this tutorial, we're not going to enter anything in step 3 for dependents or other credits. And we're only going to enter what additional tax would be required to be withheld in order to meet the estimated tax liability for this couple based on their tax filing for the year. Okay? Once that is completed, the taxpayer would sign here in step 5 and date the form. After signing and dating, the taxpayer would then either upload this form in their payroll or HR system, or they, in some instances, can submit this form, a hard copy of this form, to their employer so that their information can be updated. Okay? Now, that was the taxpayer. So what we're going to do now is, because the taxpayer is married and there's another salary to account for, we are going to clear this And so, for the sake of the spouse, in this example, we're going to indicate the spouse. So, we're going to say wizard spouse, last name Oz, social security number, fictitious address is 123 Yellow Brick Road in Over the Rainbow, Kansas. This item in step 1C is where the spouse would indicate filing status as married, filing jointly as well. And remember, the spouse makes $30,000 a year. Okay? For the spouse, that would be the only thing that would need to be completed on this form. And that is because the taxpayer has already indicated the additional withholding that would need to be taken for the year in order for this couple to meet their estimated tax liability. There's nothing else for the spouse to do on this form except sign step 5 here and date it. So both the taxpayer and the spouse would need to complete a new W-4 form to update and revise their information for 2023, especially if a new W-4 or an updated W-4 has not been completed since 2019, because after 2019 this form changed a bit, and so it changed um, how deductions, credits, and things like that will impact your tax refund at the end of the year based on whether or not you have enough withholdings based on your annual salary. So I hope this helps you to better understand how to appropriately complete Form W-4 if your tax filing status is married, filing joint. The important thing to remember here is if the taxpayer updates their W-4 form, the spouse should also review and ensure that their W-4 form doesn't need to be updated as well. Things that can impact your withholdings are things like a change in your status, if you get a divorce, if you have a child, um, anything that affects your filing status could potentially affect any refund you may or may not receive at the end of the year. And it may also affect the amount of required withholdings that would need to be taken by your employer. So I hope this helps. I'll be bringing you additional tutorials that will address other filing statuses such as head of household. If you are single, you file single, or if you file married, filing separate, because all of those situations will have different tax liability